Okay, this is Brian Stoll for Timing Strategies, Tuesday, December the 18th. Only a couple more days left till the end of the year. I want to cover some quick indices using the S&P for the starters, and go to the XLB for the materials and the GDX for gold. Also the oils using the XLE, and the emerging markets. So let's get down to it real quick. Today we took half of our position off at the close today, and that was at a closing price right there on the S&P. You can use the spiders is what we're doing. We were short 40%, like I mentioned in our previous videos, from December the 10th. Reason we took that off is because we got a spike. We've got the end of the year seasonal rally coming in. The European central banks is actively trying to push a market up. I'm sure our Feds are in the same boat. They want to jam a market going into the close, so their accounting looks better than it really is on the books. So the potential for a jam job rally going up into the end, into the upper end of this range towards the end of the year is very possible. If it happens, if it happens in one day, if we get a one-day spike, then what we're going to do is keep that 20% short position on. And if we get a move up by about 2.5 to 3% higher into that range, up to about 150.5, we'll probably more than likely put that short position back on. I'm very bearish. Problem is, the next 2-3 weeks, first, second week of January, it's going to be tough to navigate. So, we want to move lighter more so than not, unless we get a real good reason to go heavier. XLE, in fact, excuse me, let me go to the XLB, material stock. Today, we had a spike down. We hit the 1618, the 618% retracement on the XLE, or excuse me, the XLB. So if you're an idiot wave or a Fibonacci fan, which I'm less and less inclined to use, but today it was a really good point to be a buyer. Today may be a short-term bounce, and if we get a bounce that takes us back up into the range, depending on how high we go, and if we want to use some fibs, and we can take it all the way to 142. Excuse me, not 142, 42 to 43. At that point, we'll think about potentially putting on a short position with the negative ETF, negatively correlated ETF, the SMN, which is a beautiful ETF. Low risk entry position. It's a 2 beta based off the XLE, excuse me, the XLB, the materials ETF. And so that's something that we're really keeping an eye on. Again, the XLB. If we get a move that takes us down below today's close by more than a certain percent, and that's probably going to be about 0.5%, if we start heading back down to about the 40.5 level, about 0.5% below today's close, we might put that position on in a smaller magnitude or percentage, because there's a chance for a lot of whipsaws. We don't want to get whipsawed too much. We don't want to get whipsawed any, but if that's the case, we want to keep small size on. Let's go to the XLE. That's another one I'm looking for here. It's the oil sector ETF. That again, that's to me is setting up very, very generously for a very, very attractive short. Is it coming? Yeah. Where's it going to come from? I don't know. We could stagnate around just like we've done with this thing for months. Hopefully, not too much longer, but we can go back up into this range and just flip-flop back and forth, open close switch for a while. But we are looking to get short. If this XLE does again come back down below the lows of that low for December the 12th, or excuse me, December the 11th, give you a price on that. If we get below 75, we'll put that short on right away. Didn't want to do it yet today, but we're looking for it. Let's go to the to the EEM. All right, emerging markets fund. We got the bounce right back to the open of yesterday. This to me again is just a sweet, sweet setup coming in to get short based on over the next 2-3 days what we see in price action. How are we going to short that thing? EEV, baby. That thing's up 26. Well, let's go down here. 20%. See, that thing moves. That's the ETF vehicle choice to short the EEM. And believe me, that dog's day is coming. And it's coming big. Next symbol that we want to look at is the FXI. And this is something kind of neat I want to show you here. Again, for those who are idiot wave fans, which I'm an idiot just like the rest of them, we've got an ABC, very, very symmetrical move all the way down to 140 from 170 if we get that. So on the EEM, excuse me, on the FXI, which is the Japanese ETF, if we can get a trade back up somewhere, anywhere, back up to that range of 185, 187, 183, somewhere in this range, right, anywhere between here and here, and we get the right setup, what we're going to do is we're going to be putting on this, and this is going to be a very generous big position, the FXP, which is a 2 beta negatively correlated ETF for China, and the FXI. So from yesterday's close, 44%, all the way down to today, 30%. So that's a 15% difference in pricing. But again, at the right time, that ETF is just going to be the biggest money winner, and it's just successful location on our entries is the most important thing. Other than that, we're just, like I said, took our position off by half on the SPY, or on the spiders, on the basket of indices. We'll see what happens tomorrow, so not much to speak of today. Give us a call, 1-800-675-2131, or send us an email. Check out our website, and have a happy holidays, Merry Christmas, Happy Hanukkah.